March 2026 marked the quiet death of the loyal employee. According to the latest unredacted labor market statistics, single-income professionals suffered a catastrophic 42% reduction in purchasing power compared to 4 years ago. Inflation is weaponized. Automation is institutionalized. Layoffs are no longer cyclical anomalies. They are algorithmic certainties engineered by artificial intelligence systems designed to trim the fat. If your entire financial existence is tethered to one W-2, one employer, and one human resources department, you do not have a career. You have a single point of failure. You are standing on a financial fault line, waiting for the macroeconomic tectonic plates to shift. Relying on a single salary is no longer a conservative strategy. It is absolute financial suicide. The traditional 9-to-5 model was engineered for an industrial era that has been systematically dismantled. Today, human capital is just another variable on a corporate balance sheet, optimized for extraction and discarded upon peak efficiency. Yet, the vast majority of high earners blindly trade their premium labor for a flat-fee subscription to mediocrity. They cap their asymmetric upside while bearing the total brunt of macroeconomic volatility. They hand the keys to their autonomy to an entity that views them as an expendable line item on a ledger. Welcome to the era of the portfolio career. This is not about cheap side hustles. This is not about driving for rideshare apps on weekends. This is the ruthless, calculated reallocation of your human capital to create permanent asymmetric upside. It is the architectural income decoupling of your time from your revenue generation. It is how sovereign professionals bulletproof their wealth against the inevitable shockwaves of the global economy. To understand the sophisticated mechanics of the portfolio career, you must radically shift your psychological baseline. You must stop viewing yourself as a subordinate employee and start operating as a ruthless asset manager. The primary asset in question is your expertise. Top earners do not sell their time in bulk at a wholesale discount. They slice their human capital into specific, high-leverage tranches. The architecture of a sovereign portfolio rests permanently on 3 non-negotiable pillars. Pillar 1 is high-ticket active consulting. This is your immediate cash-generating engine. You do not bill by the hour. You bill exclusively by the magnitude of the specific problem you solve. By stepping outside the rigid corporate hierarchy, your specialized knowledge is suddenly repriced at market value. You deploy your expertise as a targeted strike force for multiple organizations, capturing premium profit margins without the paralyzing friction of internal politics. Pillar 2 is digital equity. This is where income decoupling truly begins to compound. You must intentionally build, acquire, or hold structural assets that scale infinitely with zero marginal cost of production. This means leveraging your intellectual property into proprietary software platforms, gated data models, or high-leverage media assets. Digital equity works continuously while you sleep. It compounds in the dark, unaffected by time zone constraints or physical exhaustion. Pillar 3 is automated cash flow. This forms the impenetrable defensive perimeter of your financial empire. The aggressive capital generated from your consulting strikes and digital equity must be ruthlessly funneled into yielding assets. Dividend-paying equities, fractional commercial real estate, private credit markets, and structured notes. This triad creates a flawless, self-sustaining financial ecosystem. If an algorithm disrupts your consulting vertical, your digital equity instantly absorbs the impact. If a market correction temporarily hits your cash flow, your high-margin active consulting effortlessly stabilizes the overall portfolio. You are no longer exposed to the catastrophic risk of a single email terminating your livelihood. You have transformed from a fragile, single-threaded employee into a highly diversified enterprise capable of absorbing massive economic shocks. Let us perform a forensic financial autopsy of the modern illusion of safety. Meet the fiercely loyal corporate executive, earning $250,000 a year. Title on the frosted glass door: Maxed out standard retirement accounts. Mainstream society calls this the absolute pinnacle of success. Cold mathematics calls it a predictable tragedy. This executive pays the absolute maximum marginal tax rate, bleeding capital at every transaction. Their fixed income is tethered entirely to systemic inflation, meaning their real purchasing power evaporates rapidly year after year. They are exactly one corporate reorganization or artificial intelligence integration away from zero. Their entire existence is highly leveraged on the dangerous assumption that their benevolent employer will simply keep them around. Now, observe the sovereign professional. They possess the exact same fundamental skill set, but deploy a radically different human capital allocation framework. They strategically cap their active consulting at $150,000, working specifically with 3 elite boutique clients. They dedicate their reclaimed time to building a powerful digital media asset that independently generates $75,000 in recurring annual revenue. They aggressively route their retained profits into private, cash-flowing investments, yielding an additional $50,000 passively. On paper, the gross annual income is nearly identical. In stark reality, they are operating in 2 completely different dimensions of financial physics. The sovereign professional has completely insulated themselves against single point of failure risk. They benefit massively from extreme tax efficiencies, utilizing specialized corporate structures to legally write off operational expenses, aggressively depreciate digital assets, and entirely shield their retained capital from governmental overreach. Most importantly, they actually own their own time. The loyal executive remains a high-paid, terrified indentured servant, perpetually dreading the inevitable fallout of the next quarterly earnings report. The sovereign professional acts as an apex predator, watching the exact same economic turbulence with absolute, unbothered indifference. The corporate executive operates under the lethal delusion that corporate loyalty buys long-term security. In the hyper-competitive landscape of 2026, loyalty is nothing more than an unpriced externality that ruthless corporations exploit for absolutely free. When the board demands budget cuts, your loyalty will absolutely not save you. The spreadsheet has no column for human sentiment. By tying your survival to one income, you have mispriced your systemic risk. Knowledge without execution is just cheap intellectual entertainment. It is time to systematically dismantle your dangerous dependency. You do not impulsively resign tomorrow. That is reckless. You execute this transition with cold, calculating precision. Your current 9-to-5 is simply your primary seed investor. Step 1 is the immediate audit of your specialized knowledge. Strip away your corporate title and identify the exact, granular skill that solves expensive problems. Step 2 requires the structural decoupling of your time. Optimize your job down to 40 hours and leverage your reclaimed time to secure one high-ticket client. Step 3 rapidly converts active capital into digital equity. The era of one job is definitively dead. Reclaim your human capital. Bulletproof your wealth. To become a sovereign entity, subscribe to this channel right now